Welcome back to Wake Up with Cheddar. Wall Street set for another big boost at this morning's open, hoping to extend major gains at the start of the week. Let's take a look at how markets are set to open this morning. The Dow pointing to a nearly 1,000 point gain. Markets on a hot streak as of now. Look at this. The Dow indicated to open higher by 3.6%, the S&P 500 by 3.37%, the NASDAQ as of now in just under 2 hours set to open higher by more than 3%. This comes after yesterday's gains of 7% across the board and even higher than 8% for the small caps on the Russell 2000. Markets on this hot streak, despite the rising case count and death toll, with sentiment boosted by early indications that the coronavirus could be contained. While futures are higher, it is worth bearing in mind that this is an incredibly volatile market that has seen swings of triple and even quadruple digit points on the Dow. It's sort of the norm, not the exception over the last few weeks. Still, good news fueling global markets, including signs that New York City could be reaching its peak. Cases slowing in South Korea and China reportedly seeing no new coronavirus deaths for the first time since January. Some other stories that we're watching: President Trump saying during last night's press conference that OPEC, the Organization for Petroleum Exporting Countries, has not asked him for a U.S. oil production cut. Russia and OPEC are currently engaged in a price war with an expected meeting on tap later in the week. Well, if you're having a hard time making sense of this market, you are not alone. And to help us make some sense of it, let's now bring in Jeffrey Korzenik. He's the Chief Investment Strategist at Fifth Third Bank. Jeff, it's great to have you on the show. Thanks for waking up with us today.
My
look,
pleasure.
I want to hear about this rally. What are your thoughts on this rally? Why, despite the fact that we have unemployment in the up to 10 million people right now, we continue to get bad news? Why are we seeing a rally of 7% yesterday and stocks indicated higher by 3% today?
Well, two things. For investors, it's always a case of, is the glass half full or half empty? And that, by the nature of it, is subjective. And obviously the markets are looking at this with a fairly optimistic view. But some of that is really fair because markets are always forward looking. We've always expected, in the words of one of our publications, this downturn to be nasty, brutish, and short. And investors and the market is already looking beyond the downturn, beyond the steep rise in unemployment, and looking towards a recovery.
So does that mean that we've hit bottom already and we're bouncing back?
You know, it's always difficult to say. We at Fifth Third are a little concerned about how long it will take to come out of this. We have not had the worst of the news yet. It's still in front of us. Even if New York is peaking, it means that nationally we probably won't peak in terms of hospitalizations and deaths for another few weeks. And then we'll start getting some really bad unemployment reports. We have reason to believe from a number of non-governmental surveys that unemployment rates are going to be north of 15%. That's going to do some structural damage to the U.S. economy. We still think that the recession will be somewhat short, but it's going to be a little choppier coming out of this.
Yeah, I guess my question would be referring to what Dr. Anthony Fauci said last night, that a sort of a different definition of the new normal. It's going to be difficult for us ever to get back to pre-coronavirus life because we are still living with, and even when there is a vaccine, we'll still be living with the specter of this. So what does that mean for the way that people buy things, the way that people go out to dinner, the way that people spend money? How long?
I think that that's probably I think it's a little bit of an overstatement. If we have a vaccine, I think we go back in many ways towards the old normal. However, one of the things that I think will shift is not so much consumer behavior, but the relationship between employers and their workers. We've already seen in the United States that pioneering employers are taking much greater interest in the welfare of their workers. And I think that will last and actually expand in the United States.
Okay, so I love this. I love that you're talking about this because I think we are one of the few wealthy countries in the world that doesn't have strict employee protections. But that comes at a price for investors because it increases the bottom line for companies. It increases the expenses for a company, decreases the bottom line for a company, and then can have a result on the company's stock price. So what does that look like on the other side of this? Does that mean that We're going to see significant worker protections now from U.S. companies that haven't had those. And what does that mean for the way that investors look at these companies?
We've actually spent years studying a subset of employers who have been providing this kind of support for their employees. They typically did it to bring in marginalized workers, people with criminal records or people in extreme poverty, and they found they needed a whole support network. The good news for investors and really for corporate America is that when you find the people who are ready to turn their life around in these instances, and then give them the kinds of supports to help maintain their employment, it ends up in having a very engaged, loyal workforce. So companies actually can benefit financially because they have such low turnover rates relative to their peers.
Look, I love the optimism here, but I have to say, we live in a country where the minimum wage hasn't gone up federally in more than a decade. So it's hard for me to really understand or believe that on the other side of this, we're going to really completely change the way that we think about taking care of workers in this country.
Well, people are talking about democratic socialism, the European model, but I think here we might see an opportunity for what I would call safety net capitalism, where it is employer driven. We were seeing it. Raises were coming before this downturn due to the pandemic. We were seeing solid wage increases, very consistent benefit increases. A robust economy really solves a lot of social ills. If we can get back to that, I think we can see corporate America taking the lead.
I love it. Jeffrey Korzenik, Chief Investment Strategist at Fifth Third Bank. Love the optimism here. Thanks so much for taking the time and waking up with us this morning. We appreciate it.
Thank you.